It's a forum basically for people to come and discuss and share ideas. And how all this really sort of ties in together is that really the focus of the event is on retirement planning.
Retirement planning forms a crucial part of financial planning. There are various options out there.
Guernsey is a particularly good destination for international pensions from around the world, but in particular from here in South Africa. So this year we've codified our regulation to make it more directly comparable with other international finance centres, and that should give people a lot of peace of mind in terms of the environment in which they're making their long-term savings and placing their money in their assets.
This has become quite important for many South Africans living here in South Africa but who work internationally, or they might actually be employed in South Africa and they would just like to diversify the overall asset base.
All in all, a really very secure, safe place for people to make their long-term financial arrangements internationally.
There's tremendous excitement out there, and I think there's good opportunity to diversify one's interests to other parts of the world, as long as you choose your sectors correctly, and obviously to choose the timing as well, which is always the million-dollar question.
There are various concerns that the Davis Tax Committee has raised in relation to collecting more tax, and one of the areas has been focused on in the area of retirement and overseas investments.
An overseas transfer charge was introduced, which, unless the person is exempt from that charge, if they're going to transfer a UK scheme to an overseas scheme, which in this case is called a QROPS, a qualifying recognised overseas pension scheme, unless they are exempt from certain conditions, there is a 25% charge levied by the UK scheme prior to transfer.
We are trusted advisors for about 7 governments to structure their own programs on financial terms.
We look at, first of all, what motivates people to actually look at a second citizenship or a second residency. What are the triggers? We advise on those kind of things, and we typically do that by presenting a series of programs that offer these citizenship programs, citizenship by investment.
There have been numerous other changes in the UK, reporting requirements, member payment charges, etc., etc. So it is an ever-changing market.
So the first thing we look at is economics. And from that point of view, at the moment the world is in great shape. So central banks remain highly accommodative, stock markets will continue to rise. And in that regard, we think equities look very impressive.
The real risk as a South African is when you're making an offshore investment, whether it be into an offshore retirement pension scheme or into an international property, etc., is to understand the risk and the opportunities that one has to hedge against the risk of a volatile rand.
And I think we are going through the second recession in the last decade. Our growth rate this year is going to be perhaps less than 1%, probably even 0.5%.
And then there's another big influencing factor is commodities. There's a very militant situation between big business and labour. We also have militancy between business and government. And one of the problems that happens in South Africa is we're just not getting enough foreign direct investment that is creating jobs and creating the wealth that we need to see in the country. What's happening now is we're seeing a recovery in commodity prices, and that should bode well for the rand, but I don't think it'll have as positive effect as it could do if we had a well-managed economy.
So in a nutshell, from an asset allocation perspective at the moment, we favour equities. We think emerging markets are more interesting. But as most people will know, stock markets change every 5 seconds. So clearly what I've said today will probably be very different in a month's time. But this is what we do for our clients. We constantly monitor all these events and decide how best to invest their money.
I think the overall message that we have is that one should still plan, one should still go ahead, notwithstanding potential regulation coming in, because if you get proper advice and you're doing the right thing and you are reporting and making disclosure of what you're doing via the very generous allowances, then I think you're very well placed to deal with any regulation that may come your way in the future.